Welcome back. Gautam Shah, CMT, founder and Chief Strategist at Goldilocks Premium Research, joins in on the show. Morning, Gautam. Let's talk about this relentless up move. Now we're at 11,600. Do you reckon that, we are in for a bout of consolidation?
Good morning. Well, it looks like, I think in the journey of every bull market comes a point where the market reaches a crossroad and where you need to just take a step back and assess the situation. I think you had one such crossroad a month back when the Nifty was at that important resistance of 10,600, 700. And once that was taken out, it was just been a vertical move up. And now as we hit this level of 11,600, there is a little bit of concern on the charts. I think the markets are slightly overbought. 11,600 is a very important resistance. If you go back to the budget day early this year, this was the level around which the market had made a low that day. And therefore, it's a very important psychological point for the markets. And we will have to see how it pans out over the next 2 to 3 days. And the reason this is important is because if 11,600 is surpassed on a closing basis and the market is able to sustain above it for a couple of days, it will open up another 500 points on the upside, because between 11,600 and 12,100, there is no major resistance. But looking at the kind of leadership that the market is enjoying right now, the fact that VIX is cooling off to levels of 18.9, global markets extremely steady. Hopefully the news is going to get better, banks making a comeback. I think all of these factors suggest that there is clearly a lot more juice left. The question is whether we come down a little bit and then go up, or we run away beyond 11,600 immediately.
Gautam, what's the view on the metals index, which has seen a decent recovery, as well as the auto sector?
Well, both these indices have seen stellar moves in the last month. The last time when I was on your channel, I spoke about metals being a dark horse, and I think it's seen a substantial move up, which is very contrary to its image, because it's been an underperformer for the last 2.5 years now. Our working target for the metals index is about 2,700, so that still good 5-7% to play for. And the medium-term target is about 2,950. And make no mistake, this is a mega structural bull market that is playing out in metals and auto, and it is here to stay. So while you could see small corrections of 5-6% from time to time, I think structurally, over the next many months, metals and autos are likely to do well. While a lot of top line metal stocks have already gone up 30-35% from the lows, I think the move is now trickling into some of the mid cap and small cap metals. So metals and chemicals and autos, clearly, I think these three pockets in the market we feel will outperform for many months to come.
Has seen of late is the return or the comeback of the private banking names, and the Nifty Bank has managed to propel a good 4% higher, with names like IndusInd seeing an 18% recovery, Kotak holding up by almost about 6% or so, and the Nifty Bank itself has moved 4% and managed to outperform the index as well. Last evening, you had that FTSE note coming in, with the announcing the ouster of a Kotak, HDFC Bank, as well as IndusInd. Perhaps that's what explains the underperformance today in an HDFC Bank and a Kotak. But that aside, do you see the larger trend within the banks of an up move and a further up move from here? Because as I see on my screen as well, you are seeing newer names and smaller banks as well participating in the rally. Canara Bank is holding up 7.25%. You've got a Federal, Axis. They're all big buzzers today.
Well, Aisha, I think it's a wonderful case of sector routine at the markets. I think I made this point on social media some time back, that it started with Reliance and IT. That propelled the Nifty from 7,900 to 9,000. Thereafter, pharma took over. Metals and auto, joined the party. And banks have been left out for the last couple of months. And let's not forget, in the last 6 years, every time the Nifty has seen a substantial move, whether on the way up or way down, it has always been led by the banks. So it was just a matter of time before banks made a comeback. I'm happy that it's done that. And I think the point that we have been making all along, that unless banks have a flurry of activity, you cannot expect this rally to end. And as we speak, you have the Bank Nifty trading at around 24,000. So there is some resistance around these levels. But if this is crossed, I think the best case for this banking rally is around 25,500. However, from a medium-term perspective, I don't think the bigger opportunity is in the banks. I know they have been the talking point for the last 4 days, But I think, as I said, from a longer-term perspective, medium-term perspective, banks are going to continue to underperform. And I think pockets like pharma, metals, oil and gas, IT offer far more value and are offering far more better setups in terms of risk reward.
Okay, so help us understand where within pharma and IT do you see fresh buying opportunity?
Well, pharma index tested that level of 12,000. From there, we've seen a bit of a cool off in the last 1 week. It's down about 800 points from the recent high. But I think structurally, the pharma index is heading towards levels of 12,600 and 13,400. And we have been of the opinion that MNC pharma is going to take a backseat or has taken a backseat, and Indian pharma companies will do exceedingly well, which is something which has been on display for the last couple of months. This is going to continue, and if at all the indices were to see some correction, the focus is quickly going to come back to pharma. So I think at levels of 11,200, 300, I'm very, very excited about the pharma space. I think 13,400 is my eventual working target over the next few months. Coming to IT, again, very quiet the last 2.5 weeks, understandable because it was the first large cap index to hit lifetime highs. That's a phenomenal achievement in today's times. And I think it's going to get better because this outperformance of IT versus the Nifty is going to continue for many months, or I would even say a couple of years. But the space that I really like within IT is mid-cap IT. I think look at the way some of the stocks have behaved. This has not happened in 10 years. I think there is a mega bull market which is playing in mid-cap IT, and we have been recommending some stocks, in this space to our subscribers.
Okay, that's interesting in terms of trends there. And finally, let's just have you quickly walk us through some of those stock recommendations as per your report. Grasim, Adani Transmission, Balrampur Chini and Mayur uniquoters.
Well, yes, there are various pockets in the market that are coming back. Sugar is one such pocket. We spoke about fertilizer last time. You've seen fertilizer stocks do very well. Auto ancillaries have made a good comeback. So that's a space that we really like for 20-25% return with the top quality stocks. Sugar, as I mentioned, we've covered a couple of stocks in the recent past. And the entire Adani group, I think the manner in which this entire group has come back in the last 1 week, it just tells me that it could actually go the Reliance way. So I would be very positive just purely based on the chart setup. So the entire group looks very interesting.
Okay, thanks very much then, Gautam, for sharing with us your outlook on those sectors as well as where you're seeing opportunity.